The JSE expected to attempt a rebound today after seemingly recovering some losses yesterday. Markets elsewhere were mixed as investors wait for a U.S. employment data. Well, let's talk to Matete Thulare now, Head of Foreign Exchange Execution at Rand Merchant Bank, talking us through the markets in early trade. Mr. Thulare, good morning to you. Let's start with the Rand, which looks to be trading at a more palatable range now. Talk us through what elements are affecting the trajectory of the currency moving forward.
Good morning, Bolly. I suppose it's been a really tough week for the Rand. I mean, if you think about everything that could go wrong, actually did go wrong. I mean, we had, the worse than expected GDP data coming out earlier this week. We had the ratings agencies also coming out and obviously giving us some of their explanations behind, their outcomes there. We had also the current account deficit, which is a further blow to the economic outlook. I mean, obviously we posted a current account deficit for the first time in 3 years as imports increased and power outages and also the logistical nightmare and constraints there have obviously curbed exports, which is heightening the country's vulnerability to external shocks. So if anything, the investment sentiment towards South Africa at this point in time really remains poor, which is reflected in the Rand's underperformance in comparison to other emerging market currencies. I mean, we have our own internal factors such as load shedding, the infrastructure decline, the political uncertainty, and also the grey listing that happened last week Friday. Now, on a year-to-date basis, I mean, already the Rand has lost about 8%. We are the second worst performing emerging market currency. I mean, we did touch 2023 highs of 1872. Now, don't forget that the all-time highs that was reached in the middle of 2020, which is 1935. At this point in time, we're not too far from that, and I think any bad news or any further, talks about further hiking from the U.S. Or any other geopolitical tension could also, just capitulate us towards that 19 level. So we're not too far, but at this point in time, I suppose all eyes will be out on the U.S. later this afternoon.
Yeah, talking about the U.S., the number of Americans filing for unemployment benefits has jumped reportedly by 21,000 from the previous week. What does this data tell us about the American employment data that's expected today?
So remember that last month, strong payrolls numbers really sent the markets running. That 500,000 print was way out from the market expectation of 200,000 jobs being created. Now, markets are expecting this to normalize today with around 225,000 jobs expected to be created in the month of February. Now, all of the past 10 payroll numbers have come in stronger than expected. And already we've seen Jerome Powell this past week saying that the returning to big interest rate hikes depends on more than just today's jobs numbers. Policymakers today will scrutinize the February numbers for three key indicators, being the payrolls numbers, the wage gains that you're seeing, and also, like you say, the unemployment rate. And if all of these numbers point to a robust and strong labor market, perhaps even just slightly stronger than what we're anticipating, that will be the green light for Jerome Powell and his team to hike by more than the 25 basis points that we were expecting. Now, in the 2 days of his Congress testimony this week, he did say that the faster pace of these interest rate increases will be data dependent. Now, already he has said that, the U.S. economy and the reports that are coming out there are showing a resilient economy and bumpy inflation. Now, these initial remarks on Tuesday and Wednesday are actually signaling that potentially come the 22nd of March, we will be expecting a 50 basis point hike from Jerome Powell and his team out in the U.S.
Well, that doesn't spell good news for us in emerging markets. Let's talk company news. That long spoken about Heineken-Distell merger. Well, 40.1 billion rand has now been approved with a long list of conditions. Talk us through some of the detail there.
So I think, the news was anticipated. The Competition Tribunal has green-lighted Heineken's acquisition of the wine and cider company Distel that's based out in the Western Cape. This concludes the regulatory hurdles that the Dutch brewer has had to overcome to seal the deal. I mean, the approval from the South African regulatory authorities comes after the Namibian Competition Commission, the Common Market of Eastern and Southern Africa have also approved the deal. So this deal was announced in November 2021, and it will see Heineken invest, 2.4 billion euros into a new company, of which Distel and Namibian breweries with Heineken South Africa will all merge, and obviously that will have a 65% majority shareholding for Heineken. Now, following this, what's going to happen is that Distel's shares are expected to be suspended on the JSE on the 22nd of March, and I think Heineken have said that they're going to try and fast track, and they're expecting this transaction to be implemented within a week's time from then in April. So it is quite an interesting one to see, because on the back of that, we will see a new company coming out, and I think this is going to be something that all South Africans will actually be bracing themselves for, to see how Heineken shapes itself up against the likes of AB InBev, which is obviously the market dominator in South Africa.
Interesting news indeed. Let's conclude with something of a positive news, much more positive, I should think. Thermal coal miner Thungela Resources expecting its headline earnings to increase by almost 100%. Another group benefiting from the coal boom?
Definitely, Claudia. I mean, as you say, this has been driven by record high coal prices. I mean, if you remember, coal prices actually increased last year as the geopolitical tension between Russia and Ukraine in February worsened the energy crisis that started in late 2021. On top of that, the European ban on Russian coal also tightened supplies of coal, and that sent the prices higher. Now that is boosting the earnings of South African coal miners and also other coal miners in the rest of the world. Now, the only issue that is hampering us, obviously, from a coal export perspective, is the fact that obviously there is issues with regards to Transnet's inability to operate at full capacity due to the shortage of locomotives and spares. There's cable theft, there's vandalism, and of its infrastructure. Now, Thungela is a spin-off of Anglo American, and obviously the global mining giant is moving away from coal. So now that you've got Thungela on its own, they're going to be releasing their full financial results on the 27th of March, and as they've already guided to the market, they are going to be doubling their earnings and also their headline earnings per share. So obviously, I think if you're a Thungela shareholder, you should be smiling all the way to the bank.
Matete Thulare, thank you very much for that market update.